Hi guys, I'm still here in Singapore, part of our financial investment series with Jess. For those who don't know him, he's a Filipino Singaporean investment advisor here in Singapore. So a lot of the things that we normally don't talk about with regards to some investments, we're going to discuss with him. We've talked about already his money story, how he made his wealth. Then we've also talked about his prediction that there will be a recession. Now we're gonna go off the bat right now. We're gonna go off investments first. We're gonna talk about insurance, because here's something very, very interesting. Jess has a different perspective when it comes to insurance and why he thinks there are some insurance that are better than others as well. So here we go. Welcome, Jess.
Hello. Thank you for having me again.
Okay, of course. Question.
Yes.
You talked to me kanina that you said when you came here into Singapore, sabi mo, you didn't really think insurance was a good thing?
Yes. When I first started, when I first came to Singapore, I really wasn't thinking about insurance. I think insurance is a waste of money. The premiums are a waste of money. I guess primarily because I'm always on an investment mindset. I always think like, I'm not gonna get any return. It's difficult to claim and all that. But I think that's partly because of what is our experience in the Philippines. I mean, we hear a lot of these pre-need companies, going bankrupt and all these other things. They're not really insurance companies, but I mean, it's just a perception, no? Then again, after listening to a lot of people in the industry, financial industry, I realized that's actually a very good part of financial planning. No? You need to have it in your portfolio, because we don't really know what's gonna happen in our life, whether there's an accidental death or critical illness. And even if you save up so much money, one day if something happens, at least there's it's the only asset class, I would say, that gives you money when the worst things happen. You cannot tell your investments to return your money at the same amount that you put in or make a profit. But with insurance, most of the time you get more than what you paid for.
Okay, here's what's interesting though. You mentioned that of all the types of insurance that is out there, you're a firm advocate of term insurance. I just want to know why, because in the Philippines, it's kind of split. You go to and talk to different people. They're split in terms of ano ba talaga? Whole life insurance, endowments, VULs, term insurance. But when I talked to you were very, very passionate about sharing term insurance. So why should people, especially Filipinos, invest in term insurance?
Okay, so for me, term insurance is really a very value for money proposition. You pay a very small amount of premium for a very large amount of coverage. I'm not saying that the other policies are not good. In fact, I also look at them, and I also recommend them to clients if the clients want it. But for me, the really value for money proposition is term insurance, just because I'll give you an example. If you're a 30-year-old male or female individual, and you want to get $1 million policy, $1 million US, so mga 50 million pesos, you're probably only going to spend $1,000 or less a year for a 30-year term. So that way, you save a lot of money for other things, like for your family's expenses, for your maybe save the extra premium for your investments, and it doesn't really take a lot of out of your budget. So if the cost of your insurance is like $100 a month, it's not really gonna dent your budget. And even if you're earning in Philippine pesos, it's still very, very I would say affordable. Yeah.
But how big is the significant difference between term insurance and other insurances out there?
Okay, what I've seen before when I was doing my research a few years ago, term insurance for those who are in Singapore and those Filipinos or clients who fly in from other countries, it basically a lot cheaper, no? What I've seen was that cost of insurance in the Philippines around 300 to 500% more expensive. And I'm already comparing a term policy versus another term policy. So actually that's a huge difference, no? Especially for younger people, no? The younger people tend to have a much bigger difference in terms of savings.
Pero it's interesting, a 300% difference between the insurance in Singapore and in the Philippines.
Yeah, and
Whoa.
people from overseas can actually fly in Dubai. So it's not, kasi a lot of people think that, oh, you can only buy it if you're living here in the Philippines, in Singapore. No, it's not true. You can actually fly in Dubai. So you can you can talk to me just to find out more, and then you can, if you like it, you can actually fly in.
But what I'll do is I'll post a link, no, on how you can get details about it, so that if you want to know more, just click the link below and then we'll get you connected to Jess. But so now you talked about term insurance, no? The biggest argument kasi there for a lot of people advocating for other types of insurances, term insurance, after some time, wala na siya. So sayang, that's one.
Yes.
Number two is term insurance, pag tumanda ka, you will have to adjust your payments again. So what's your take on that?
Okay, I think this one we need to clarify a few things. One is that it's true that if you buy a term insurance, it's pure expense. So basically, you throw, it's like throwing your money, no? But it's not actually that. If you think about it, if you buy a term insurance, you should think about investing the rest of your money. Kasi if you buy, let's say, investment-linked policy, VUL, or whole life policy, or any type of policy where there's a savings and investment component, technically you're doing something similar. It's just more like a DIY ILP or VUL, no? So parang nangyayari, yung investment part or the savings part of your portfolio, you're doing it yourself. So it could be direct stocks, it could be property, it could be mutual fund. So it could be a lot of different things. But you have that flexibility. Kasi if you buy investment-linked policy or VUL, normally you're limited to the type of funds that are offered within that insurance policy. So yun. So in terms of the you're not getting any money back, right? Well, if your objective is to say you want to give it to the next generation, you can actually get a policy that's up to age 99. So you can extend it that long. It's not possible.
That's very long, ah.
It's I don't think it's possible in the Philippines, but you can actually buy it in Singapore. You can extend it up to age 99 if your objective is legacy, no, for the next generation, getting some money back, no. Kasi if you want to get some money back, basically the idea is that, one, we all know that nobody lives forever, right? So I guess everybody can agree on that. The second thing is that we also know that the probability of reaching age 99 is very low. So your probability of claim is very high. So I did a calculation for somebody who's 30 years old and extends the policy until age 99. You're probably only paying around 20 or 30% of the total claim. So over 69 years, for example. So if your policy is say $1 million, 50 million pesos, you probably only paid over the 69 years over mga around $200,000 to $300,000. So what happens is that you get all your money back and still get some pocket money, which is not a small amount kasi it's almost 400% return, eh. Yeah. So yun. And then with regards to the question on is it the amount the premium increase as you age? Actually, that's also not an issue. What I do recommend people is get a level term. No, a level term is basically you lock in the price for the rest of the number of years, so it doesn't increase. No, so basically the amount of premium you pay from year 1 up to year 60, 30, 20 is all the same amount.
Another question that people might ask, no, if I lock that in, will that make it more expensive or hindi naman din ganun kalaki?
It will be Okay, I'll give you an example. It will be slightly more expensive now, but on a longer term, it's actually cheaper. So I'll give you an example. Say you buy a 10-year renewable policy. If you buy a 10-year renewable policy, at least the one in Singapore, every 10 years, the price increase. Okay? So if you add the amount that you paid for the first 10 years, second 10 years, and third 10 years, it will end up to be 50% more expensive than a term policy that is 30 years already, fixed for 30 years. So you end up buying cheaper on a longer term basis. But on a now, like price now, then obviously the shorter period is cheaper. So if you are on a really tight budget, then you have no choice. You have to go for the 10-year policy because you're trying to save money. But if you're looking for value for money, normally what you want to do is you want to extend the number of years to as long as possible that you think you can afford and you think that you need.
Okay, good, interesting question. So, interesting answer pala. Very insightful. No? While you were saying this, you were mentioning kanina that premiums here in Singapore are much cheaper head to head against premiums in the Philippines. What makes insurance here in Singapore cheaper, and why should it be attractive even for people who are not living in Singapore as well?
Well, I think it boils down to economies of scale. Because insurance works in the law of large, under the law of large numbers. So the more policyholders and the bigger the policy sum assureds are, the cheaper they can go. Think about it as volume versus retail, no? This distribution versus retail. Let's say you go to Divisoria, you buy one T-shirt and cost you 100 pesos, and then you go to the same store and then you say you want to buy a dozen. They probably sell you at 1,000 pesos, so you save, right? So similarly, in insurance, ganun din. The more policyholders there are, the bigger the policies, the more they can price cheaper. So actually, if even when you buy your policy, your own policy, let's say just for yourself, the higher amounts are actually cheaper on a cost per thousand basis. Meaning, let's say $100,000 cover and a $200,000 cover, mas mura yung rate, yung 200,000 compared to the 100,000. Same thing with the 400,000 compared to the 1 million compared to the. So basically, the more you buy, the cheaper it is.
Okay, but has it something to do also that because Singapore is relatively a safer country, does it have something to do with that, or it's just really the magnitude of people getting insurance policies here?
Yes, there's also of course there's also some impact, but primarily I would say it's really the economies of scale, because Singapore technically is a small country, no? It's only like around 5 million, but the penetration rate for insurance is very high because by default the government already gives like $50,000 cover for every single citizen and permanent resident. So that's 4 million people already, and each person typically they will increase their coverage by a few $100,000, and a lot of people actually just buy $1 million if they can afford it, no? Especially for those who are buying term policies. So you have the scale for that, and then you have the 20% of the population, another million people, for foreigners who are always like being replenished every few years. So that's another like number of people being changed every single year. Then you have the people coming from other countries who fly in to buy. So you have that number is actually very big. Now compared to the Philippines has 100 million people, but the penetration rate for insurance is only 1 to 2%. So there's only 1 to 2 million people. And then the amount of coverage per person, usually they offer mga 1 million pesos up to 2 million, 3 million, 4 million, 5 million. That's only around, very small amount, no? Mga 1 to 10% of what's being offered here in Singapore. So basically it's the size. Yeah.
Here's another question, because the Philippines, you have very young people. The demographics are, median age is 23 years old. When you're 23 years old, or probably as the people who are below 30, their income may not be as high as compared to people in their 40s and their 50s. What's a good starter coverage that they can possibly get? It's adequate enough already, pero it's not so painful pa, especially for those who are starting.
I think you can always start with what you can afford. You can upgrade it as you earn more income.
Okay.
So I think
Kunyari, 30 years old, non-smoker, something like that. What would be a good...
if you have probably 2,000 to 2,500 pesos a month extra, you can already get probably 500,000
Okay.
to $1 million covered.
Yeah. And that's for the term insurance na...
Yeah. But it depends on how. Kasi it's tricky. If you want it to be cheap, right? You can go for the 10-year renewable. But if you want long-term cheaper, then you get for the longer term policies. But of course, the earlier years will be more expensive. Yeah, so we'll just have to adjust. So, but technically, what you can do is you can, what you call it, parang stacking. You stack. So you don't get the 1 million right away if you cannot afford it. You just, basically, if you say your budget is 25,000 pesos a year or $500 a year, right? Then you start from there.
So that's possible they can get something for 25,000. Oh, interesting.
Yeah, so actually even on a Philippine salary, you can afford.
Okay.
Yeah.
Now with this question naman, since people will fly from the Philippines to Singapore to in Gives get a policy, in terms of claiming, will they have a hard time should something happen to them if they're based in the Philippines? Will their families have a hard time to get their claims?
That shouldn't be a problem. But of course, what I normally tell clients is that it's always good to have some local cover then, because definitely local coverage will be faster to claim kasi you're there, right? The release of money is local. But in terms of the documentation, what kind of documents are being asked for is similar. So probably if they say death, then you give a death certificate, those type of things, and the proceeds will just be wire transferred.
But do they have to physically go also to make the claim?
No. Technically, you just need to submit the documents and that will be enough. But I usually tell clients just prepare mentally in case they want to ask for appearance. And I mean, there are cases naman, I think, hindi pa naman nangyari, but I think just in case lang, because you think about it, if you insure yourself for $1 million or 50 million pesos, right? And the cost of flight is only like 10,000, 20,000 pesos. What is that, right? It's like peanuts compared to what you can claim. And the other thing is also because the idea is that sometimes the insurer wants to make sure that they're paying to the right person. What if your name is Juan de la Cruz? Diba? And there's so many people, diba? They have to verify it's the same person.
Yeah.
Diba? Especially if your name is very common, or maybe if they feel like maybe there's potential fraud. No? So there's a lot of things that they may want to verify, but technically, there's no need. You can just send their documents.
Alright, last question. Before this last question, so regulatory-wise, there should be no problem for Filipinos living in the Philippines to be able to open.
They just need to, basically, insurance is jurisdictional kasi when you sign. So you have to fly in.
Okay, but I mean, they're not based in Singapore. That's
That's fine. That's fine. But they need to fly in to sign the policy. Kasi part of the requirement is actually to show your immigration stamp that you are here.
Okay.
Yeah, so you cannot just, get away from it.
Okay. Yeah, that's pretty fair kasi there has to be really a period that at least the advisor would actually see that if you're in proper health.
There are a lot of other things kasi, like even the term insurance, there's a lot of innovations, but I think we probably discuss in future videos. But for people who are worried about this, money is not coming back, there's actually a term policy now that is a money back term policy, money back guarantee. Yeah, so but that's for another
video.
Yeah.
When I get back, or when I'll be back here in Singapore. But last na lang, before we put this video to a close, what's your take on buy term and invest the difference?
I like it because I'm naturally a very aggressive investor, and I prefer to put the money to work and with my preferences. So whether property or mutual funds. So I like the flexibility. That's why I like the buy term invest the difference. The other thing is because if I need to kind of like cut down on certain expenses, I know that I can still maintain my insurance policy because the premiums are quite low. So I prefer that, but it doesn't mean that I don't agree on other types of policies. I think it's really situational. I would say that, you know, some people, maybe a VUL or a whole life policy makes sense for them, especially if they're spenders. No, kasi I've been in seminars before, when after we did the talk, people were saying, oh, sana hindi ko binili itong property, sana hindi ko binili itong VUL, etc., etc. And then my question back to them is that, what do you think would have happened to the money if you didn't put it in these instruments? And then yung sagot normally is, most likely wala na. Diba? They already spent it. So I'd rather that they put it somewhere else. No? So yeah, so I think term insurance gives a lot of I would say flexibility. So that's what I like most about it. And of course the premiums are cheap, so it's a very affordable.
Alright, so that's it. I hope you guys learned a lot. No? This is something that I normally don't talk about, so it's nice to pull in people who are very, very passionate about it as well. So if you'd like to know more, we'll put the link below how you can get in touch with Jess. But key things that I've learned from this is, number one, Singapore is relatively one of the best places to put or to open insurance policies because it's relatively cheap and the coverage is very, very wide, very, very big. And for a small amount, you get a large amount of coverage. And even if you are in the Philippines, you can also open an account to protect yourself. And from what Jess said, he believes it's something that's needed to help hedge the people that you care about. And it's something that you pay a small amount, but you get a larger sum in return later on. And he loves buy term invest the difference. So that's it for now. We will have another video talking about diversification in different markets, because it's not just about the Philippine market anymore, it's also about how you can actually make money in different stock markets or equity markets in the world. So that's it from Singapore, Marvin Germo. I hope this video helps you trade well, trade strong, and trade smart. See you all again soon.